Welcome to our quarterly wrap of things we've been thinking about when looking at your portfolios. This is an opportunity for us to give you some ideas about what we've been thinking, what we've been hearing, what we've been reading, and what the performance of overall markets has been. Of course, this is not necessarily about the particular performance of your own portfolios, but they're impacted by what's going on in the wider markets. The third quarter of 2018 was actually quite a strong performer in most markets, both here and overseas. The Australian market hit some close to record highs again during the period in August and September, and US markets continued their march upwards, and we had very strong performance in US stocks over the period, both on the Nasdaq indexes and also on the wider Dow Jones Industrial Average. So we also had a situation in the third quarter of 2018 where the Australian dollar was falling quite appreciably, and we had a fall in the dollar against most currencies of around about 2%. This obviously gives us the opportunity to have a better performance from those of our companies which export overseas, but it also weighs quite heavily on the sentiment in terms of the way that people look at the Australian economy. RBA held interest rates on hold once again. I think it's about the 23rd or 24th month in a row, and most of the pundits that I've been reading about and listening to have been saying that it's unlikely that there'll be a rise in interest rates now until 2019, but almost certainly the next movement in interest rates here in Australia will be upwards. So then we come to the month of October. And October is a very dramatic month in most markets, both Australia and overseas. You might recall that the big share market crash which occurred in 1987 occurred in October, and the big share market crash which preceded the Great Depression in 1929 also occurred in October. October is a very wobbly month for most markets, and this October has been no exception. Today is the 25th of October, and we've had 3 or 4 days of falling markets both here and overseas in a row. There was a slight bounce around about the 16th or 17th of October, but now by the 25th we've had a couple of days of quite substantial falls. In fact, today, as I'm recording this video, the Australian share market has fallen by around about 2%, and there was a 600-point fall on the US market last night. The main thing is not to panic. When you think about what it is that you're actually saving for and how long you're going to be saving and how long the money is going to be invested in the market, slight corrections like this are going to happen all the time. In fact, I've been examining our own client base and thinking to myself, well, who could be negatively impacted on a permanent basis by a downturn in markets such as these? The only kind of client that I could come up with that would be impacted would be somebody who wanted to withdraw their investment in fairly short order and actually spend the money on something else. If you think about it, even those of you who are in drawdown phase, either having pensions paid or whatever, most of your investment is going to remain invested and will have the opportunity to rise once again as the market recovers, which inevitably it does. Those of you who are continuing to accumulate your retirement savings by making contributions to superannuation, etc., will be able to take advantage of lower prices as your contributions go into those investments. So really, there's no need to panic at the present stage. We need to hold fast to our strategy and recognise that we're in this for the long haul. I hope that's given you some insight into what we're thinking today, 25th of October 2018. Who knows what tomorrow will bring? I hope it's a return to some stability in markets, but I have no confidence of that, nor do I have any crystal ball which is going to give me any indication as to what might happen into the future.